Good morning, ladies and gentlemen. My name is Greg Michaelowski from ForexLive.com. Today's date is August 31, 2022. This is the Morning Forex Report. I'm going to take a look at some of the major currency pairs. Stay tuned. If you guys haven't seen it, I'm doing some small education videos. You can find them by going to ForexLive.com, clicking on Education. And this one I did yesterday, Kiss in Your Trading. What does that mean? Keep it simple to be successful. Go take a look. Let's start off by taking a look at the Euro versus US dollar and keep it simple to be successful. 100 and 200 hour moving averages are near converged right here, just below the parity level at 0.99884. We've been talking about this trading range through here and talking about any sort of move to the upside, not being able to get and stay above the 38.2% retracement of the last move to the downside. So we are seeing non-trending type of trading here. Lots of ups and downs, ups and downs, ups and downs. And although we held the 100-hour moving average during yesterday's trade on the downside, today we fell below that level and below the 200, and you'd think that the price would go lower through here, especially after breaking below this low, this low, this low, this low. But no, it's just not meant to be, because the markets and the traders are a bit uncertain about what's going to happen. 75 basis points by the ECB, 75 basis points by the Fed. Does that mean that we waffle around in this area? Maybe, and or it certainly seems that way. So failures are opportunities to go the other way, I guess. At times you look for the market to go lower through here. It doesn't do what it's supposed to do over the last 4 or 5 hours, and then starts to move back up. This bias switches back to the upside. If you like to do that, go ahead and trade. If you don't like to do it, then wait for the breakout. A breakout would be probably above the 38.2% retracement. If we start to move, because the trend is more to the downside, if we start to make more headway to the downside, maybe get below this 99.51.5 level. Recall from, if you go to the daily chart, you go to the low price that was in July. Where does that level come in at? 99.51.5. So we did see some support buying near that level and resistance here before moving higher. So if we break below that level, look for more selling momentum on the downside as the sellers start to take more control. Dollar versus yen is another currency pair that is rallied to the upside through on Friday, and then continued on Monday. And since then, we've been waffling back and forth. We did reach a new high here today at 139.073. If you take a look at the daily chart, actually, that was yesterday. Sorry, 139.073. That was yesterday. Looking at my daily chart here, that took us in between the high prices that we saw in July, between 138.87 and 139.38. So we moved to a high of 07 yesterday. Today's high was lower and near the low end of these swing areas on Monday's trade. So we are seeing more of a downside pressure here for the dollar versus yen. At least we're seeing sellers against the highs through here, which gives it intraday at least a little bit more of a bearish bias. Down here, where the 38.2% retracement of the move up from Friday's low is located, we also have the rising 100-hour moving average, which is catching up to the price after as a result of this consolidation here. So if we move below the 38.2, move below the 100, and then start to move below the 200-hour moving average, that would start to increase the bearish bias to the downside. Until then, we're consolidating after a sharp run to the upside. The sterling versus US dollar, that's making new lows. And if we take a look at the weekly chart, the low, every new low that we make here on the hourly chart is making a new low going back to March of 2020. The pandemic low reached 114.03, 1.1403. The low price today reached a nice round 116-ish or so on the downside, 116.0007 to be exact. And we saw a bounce back higher in the last hourly bar. So this was a low just on the current hourly bar and moved back up. We are back above the low from yesterday. We keep on trying to see if we can stay above previous day's low. So the question now becomes, can we stay above the 116.20 level in the short term? This is short term. And then can we get above this low right here, 116.46? That was Monday's low, and we fell below that level, and then tried to hold support, moved higher, came down, moved back below it. So you get the point. We're looking in the minutia here because the price isn't following through on the downside with much momentum. If I put a trend line here to here, I think we broke just a little below. No, we came right down to the bottom side of the trend line and bounced off that level. So, you know, going lower, but not a lot of momentum to the downside for this currency pair. Let's just, for giggles, put a trend line here. Oh, look at that. We have a nice little wedge forming. If we move above the top side trend line, that would also be more bullish for the sterling versus US dollar. Dollar versus Swiss, that's been on a move to the upside here. Recall at Jackson Hole, S&P's Jordan, Swiss National Bank's Jordan, spoke a little less hawkishly than any of the other central banks. So they go in the bucket of being like yen or Bank of Japan type of thing. That's weakening the Swiss franc. We've seen run the last 4 days to the upside here, and moving above the 61.8 of this last move to the downside at 97.89. I think we moved up just to 98.06, so we got above the 98 level. This currency pair obviously has seen lots of ups and downs and pretty trendy type things. So we're in that upward trend here for the dollar versus Swiss, helped by the Swiss National Bank's Jordan's comments over at Jackson Hole. This is what it looks like on the hourly chart. And really, you know, unless we go below the 0.97619 level, we're stepping higher here in this currency pair. If I were to take a look, take a look at the move to the upside from the Friday low, the 38.2 comes in at 97.19. So this level, 38.2, if we even move it up to this week's you know, sort of the move up from this week's, the trend move up from this week, the 38.2 comes in at 97. So these levels right here, this is really the closest risk level for the downside for the Swiss dollar versus Swiss. If the price is able to stay above that level, it's more bullish. Just a quick gander at the Aussie versus US dollar. Up and down price action. We tried to move higher yesterday and then retraced all the way back down toward our low prices from Monday and below this swing area through here. You have to go back in time, follow that line right here. You can see how it goes back and back and back. So we fell below that level, fell below it here, fell below it here today, but found support near the low price from on Monday's trade, and we are seeing a bounce back in the currently hourly bar and above this swing area through here. What I like about the upside here is that sellers came in right against the 200-hour moving average, kept the price below that level in that currency pair. Dollar CAD is also moving higher as oil prices continue to go lower, and we're into this swing area ahead of the extreme here. This is what it looks like on the daily chart on that extreme. This is the extreme above that level. This trend line right here, maybe, or that old trend line right here, cuts across at 131.597. Maybe that's a level to pay attention to. So once again, go back to back to Forex Live Education. Take a look at the KISS and Trading, and also look at other videos that I've put up through there. They're just little short educational videos, little things that I've learned through the years and years and years to give me that gray hair. So I think you find them useful and beneficial. My name is Greg Michalowski. Good fortune with your trading. Bye-bye now.